Good day, guys. Welcome to Forex Walker. Welcome to episode 82. I actually, I was supposed to be, I recorded a video similar to this one, and I had to back down on that video. It was a monetary policy divergence trade, and it was talking about the boom bust processes created by interest rates. And those are the waves that are created by the interest rate relationship between currencies that one currency is moving into a recession and the other is not. So I had to bail out on that recording. I had to re-record uh, another video that it might talk about monetary policy divergence, but not in the way that we normally, in a way that, because that video was 100% the same system that is used by hedge funds, and I thought about publishing it and I decided not to publish it because I don't want to be in trouble. The reason being, you would be in trouble in a form of saying you are publishing the information that is used by hedge funds, and that's how the hedge funds and the mutual funds can promise you your money without losing it. And let's say a lot of people end up having access to that video. The hedge funds and the market makers will have to change the way in which they are trading in the markets, and that those are my fears because I'm enjoying the eating at the moment. I would rather keep the secret for the hedge funds and continue to eat. Perhaps when I have enough money, I might publish that recording. But for now, I decided to cancel the episode 82 on Forex Walker and record a second episode for the 82nd episode. I'm not publishing that video. I will, however, be publishing this current 82, which is a price action. Uh, uh, the price action. Uh, I'm trying to talk about the, what do we call it? A price action recap for 2025. Today is the 6th of, I hope you can see the date here. It's the 6th of Jan 2026. So the millennium year will be in June, where I will be celebrating my birthday on the 6th of June. So it will be at triple six. So that's my millennium year. The last triple six that I had was in 2006, and it was a triple six. So we're going to have another triple six in June the 6th, 2026. So that will be my second millennium year alive. So this is the pound USD. We talked about the pound USD trade, and both currencies introduced interest rate cuts. The only difference is that the interest rate cut that was introduced in the United States was a hawkish interest rate cut. Now, a hawkish interest rate cut is when I should just call it an unnecessary interest rate cut because the economy is seen to be doing well, but you can only see that difference when you move into the exclusion of energy prices, which is the core inflation, core uh, CPI, and all the other cores that exclude the fuel and energy, the food and energy prices, which is fuel prices. So at the moment, we are looking to hold a reversal on the pound USD. Let me show you what how we draft the reversal. I was actually expecting. I'm having mouse problems at the moment. I was actually expecting. Let's see what we can do. What the feed here. I apologize for having too many feeds, but the feed will only let me. The feed will only work when we have that 50% reversal. We're expecting the market to drop below this low and reverse to come back here. Let me show you how I draft my price action movements. Let me use a red color, and that's how we are expecting to hold the shorts. Let me give you a red color. So this is how we're expecting a break below. I call it volume, a break below this low. And after that break, I'm expecting a reversal to the previous shoulder and a drop. But my expectations here were a reversal all the way up here to the previous shoulder. But the actual entry was actually here on the previous times that we held a trade on the previous 50% feed that is up here. So the expectation here is that the market will reverse from here and will buy the US dollar and sell the pound. But this is not the trade that I'm willing to take. This is the daily time frame on the 6th of Jan 2026. Let's look into the sister currency, which is the AUD CAD. We talked about our fourth quarter currencies that I was looking forward to trading. We talked about, let me show you something on the weekly time frame trend line. Oh man, I'm having Wi-Fi problems. We talked about a first touch, a second touch, and a third touch was supposed to manipulate on this weekly time frame trend line. Let me show it to you. The manipulation was up here, and a lot of people who are trading price action, they were expecting this third reversal. Let me show you the third reversal that manipulated this one or this one. They were expecting this to give them a reversal all the way. Let me show it to you. They were expecting this manipulation of this weekly time frame trend line or this manipulation to give them a drop all the way down to this low down here. But when you have macroeconomics and monetary policy divergence as well as market sentiment, you are able to know that even when a movement of a currency pair is all the way up here or up here, uh, by price action, it is overextended. That means when it comes up here, you should look for sells, and I talked about this on the previous episodes, and I said you cannot look for sells when you have context in macroeconomics. This will be a continuation and a break all the way up there. I believe that if you can look into my previous trades, you will see exactly what I'm talking about. So we held the currency from here, and the currency did not do what we were looking for. So we had a reversal all the way up here where I almost gave up on this trade, and we had to take off. We needed a little bit of patience to be able to break above this line where a lot of traders, price action traders, were looking to hold sells. So I was looking for longs because of context, because of macroeconomics, because of monetary policy divergence, because I was expecting the hedge funds to hold longs on the AUD. Yes, the CAD will go long soon, but for the moment, it will not. Let me pause for a second. So what you see here is actually the power of just knowing. Let me show you something here. If you would have had some kind of the feed flipping it up and having this reversal from the 50% feed, you would expect to hold shorts and sell the market. But because of the power of macroeconomics context, I mean, these things are available. You can just take here and see exactly what you were looking for, balance of trade, and all of those things. So a lot of people don't want to look at this, but the broker made it this way for you to be able to make money. But I don't really look into these things. I just use them as a reminder in case I forget something that was available here. And that's how I do it. This is the previous shoulder that you can see here. And you can see that the market reversed directly into the previous shoulder, and it took off all the way up there. This is the projection. When you see a blue line looking like this is a projection, I was expecting this part to just reverse somewhere here before we take off, but you can see where it went. It broke this high, which is volume for me. I just look at it at this as volume, and the market took off, and you can see that those who are holding longs from here are hedge fund managers, and they're expecting the market to keep pushing higher. And those who don't really have the information, those who don't have context, are looking to hold shorts. So it's a win lose situation that most people are having. Remember, this is the first touch, the second touch, third touch manipulates, we hold shorts. The first short that I held was up here. We went all the way down there, but here we're still holding more shorts. With the current expectations in macroeconomics, we're looking to buy the US dollar, even though I am not a fan, and holding this trade will be temporary for me because it's a negative carry and it won't really make that much money from me. uh, I would rather focus a lot on other trades and not the negative carry. Remember the AUDCHF that I talked about? I won't explain the reason why I'm selling the CHF in this episode and why I'm buying, but this is just monetary policy divergence and the CHF being in the negative carry, being at interest rate level of zero, they are being forced to print money, and that will collapse the currency because printing more money weakens the buying power of a currency based on oversaturation. And that's the reason why I know that they may not take interest rate cuts into the negatives, but they're being forced to print money, and because of that, and they saw exactly what happened with the Japanese yen on the previous economic boom. They were their interest rates were in the negatives, and they struggled from that. So at the moment, I'm just observing the performance. Remember, the main trade started here on the 20th of October 2025, and the reversal was on the 15th or 17th or 18th of November, and that's where we took off. So this is just a tiny pullback that came out of that, and we're expecting to at least break above this high and perhaps land on this order block. These are the reasons why I would be satisfied with taking profit. I want to show you where this order block ends, and this is where I take profit. But once we break this high, I can always take profit. But we can always wait for the market to get to the take profit level, and that will be my AUD AUD CAD, and I almost uh, decided to quit on the CAD, but at the moment I'm holding the CAD short, but it is highly risky and safer to substitute it with the CHF. Thank you guys. I'll see you on the next episode. Goodbye.